Walmart earnings today showing consumers are spending money again, but Bespoke highlighting data showing that people are also spending more money eating out as well. Spending on restaurants almost outpacing spending on groceries. The sector now accounting for 12.1% of total retail sales, making it the third largest sector behind autos.
So which names are poised to win? Joining us right now is Paul Hickey. He is from Bespoke Investment Group. Let's go through the list, my friend. Who is going to win here?
Well, so three names that look interesting here based on this overall trend, but more specifically to the companies and consumer tastes. The first is restaurant brands QSR. They own Tim Hortons, Burger King.
Right.
And so what's going on with them is that their traffic at their stores in our monthly Consumer Pulse survey is very strong. It's near the highest levels in the history of our survey. So there's strong customer traffic there. So and Popeyes they also own too. That stock has been doing well. Shake Shack is a smaller name. It's all over New York, but it's not all over the rest of the country. So we're going to see it's a nationwide expansion play. The valuation there is a little bit of a concern, but in these kind of big expansions, you don't get cheap. And Shake Shack's got great technology with their mobile app. You order beforehand; it's all ready when you get in there. They can take a lot of orders with minimal labor costs. And then finally is a company called Noodles & Co. It was an IPO about 4 years ago and was pretty much a failed IPO. The stock did nothing but go down. And that was mostly because of its expansion strategy. It didn't really, they weren't ready to expand as fast as they did, and it wasn't done correctly. But they've really closed underperforming stores in the last year. And in their last quarter, their comps were the strongest they've been, I think, in 6 years. So that's a turnaround.
I've never been to it. Where is Noodles based? Where can I go to a Noodles?
They're not around this area. They're more Midwest, but that's the point.
I mean, they're also a long way from their $52 high at $10. To your point,
right. So
Paul.
they came out. They came out as an IPO, and it was horrible for 3 years. But the stock's really was beaten down, and it's been rising from the ashes, so to speak. And it's a member of our Bespoke 50 list of attractive growth stocks.
Can I just ask you a quick question, Paul? I get the consumer spending argument on restaurants, but isn't sometimes the mix between, like, if consumers are going to restaurants over grocery, have to do with some of the inflationary pressures and the price pressures, and we're finally starting to see that rise across commodities, and does that change the dynamic?
That could be. That's a part of it, but this is, if you look at the chart, I sent the chart over. I don't know if you showed it up on the screen, but it's a trend that's been going on for some time now. And so I think there's a lot of factors at play. It's the experiential. Consumers are looking for experiences over goods. They're looking at the demographic trends. As Americans are older, there's more empty nesters. They go out more often than people with families. Disposable incomes are higher, so that's going to help out things. And then with both heads of households working, there's less time to cook. And finally, technology. This is also an Uber Eats play because
Paul, we got to go. Give me your 10 seconds on Chipotle. I just need to know. Given we keep every day, there's another headline on Chipotle.
I don't know what the food quality issues are, but it keeps cropping up, and you don't tend to see that at a lot of other companies. So it's just a tough story there right now.